periodic table, Pythagorean theorem, y equals mx plus b. What do all of these things have in common? They all have been completely useless to 98% of us in our adult lives. But do you want to know something we all have used every day since we learned it, no matter what we're doing now? The alphabet. Yes, our ABCs. And believe it or not, we use 2 letters in particular to make us money week in and week out. Want to know which letters they are? Of course you do. And we've got you covered. Our mission is to help you build wealth one video at a time. Welcome to the vault. What's going on, family? It's your favorite headless YouTuber, back like I never left with a brand new video. And I'm so excited for y'all to see this new season of content because I'll be taking us all the way back to elementary to prove that everything you need to know about stocks was learned before you even hit puberty. Before we dive into this week's video, any idea what time it is? Don't worry, I know it's been a while. It's time for some Monday motivation. Today, do what others won't, so tomorrow you can accomplish what others can't. In today's video, we will talk about how to make money using the letters M and W. Yeah, you heard that right. By simply being able to identify these 2 very simple letters, you are able to make actual, real-life money in the markets. And in addition to this quick lesson, I will also provide my thoughts on the market going into this week as a part of our new weekly watch list. If you're new to the channel and like what you see so far, show us some love by liking the video, subscribing, and making sure notifications are turned on so you don't miss any new content. Without further ado, let's get to it. So how exactly do these letters, M and W, make us money? Well, when you see either of these letters forming on a chart, you're looking at a potential reversal pattern. Basically what that means is that whichever way the stock was trending, up or down, is getting ready to go the other way. Let's take a closer look. The M pattern is also called a double top chart pattern. Looking at this image, we can see that this stock was on the uptrend here until it hit resistance, which we'll say was about $40, causing it to pull back from that uptrend to here, which we'll say is $35, where it found support from falling any lower and then bounced back to the same $40 resistance as before. And if you're unclear on what support and resistance are, we have a quick video dedicated to those concepts that you should definitely check out. Now, the key thing to note here is when you actually want to enter the position when you identify the M forming. Most people like to get in here where it finds resistance for the second time to try to capture the entire move. Now, this sounds great, but in reality, it's nothing more than a gamble. Now, I can't stress this enough. Trading is only gambling if you treat it that way. That's why we prefer to trade confirmation over anticipation. So instead of anticipating the possibility of an M pattern forming, the correct thing to do, or the VIP way to do it, is to wait for confirmation. So where exactly is this magical confirmation area anyway? Right about here. You'll hear this referred to as the neckline. The M is not confirmed until we get a break below the neckline. Once we get a candle below the neckline, we can play puts and expect a nice move down. Now let's take a look at this very well played out double top M pattern for Nike from this year. As you can see, Nike started a very strong uptrend from 129.44 up to 173.96, where it finds its first resistance point. It pulls back from that uptrend down to 144.37 for the support where the neckline will be. It bounces from there back to the second resistance point of 179.10. One thing to note here, 173.96 and 179.10 are not the same number. So what that tells you is that whether it's an M, a W, or any other chart pattern, it's not going to be cookie cutter perfect straight out of the textbook every time. But I will say the closer the numbers, the better. So from that 179.10 resistance, it falls back down to where the neckline is at 144.37. Again, confirmation over anticipation. We don't want to play puts on this play until we get a full break below that neckline. I justify a full break by a full candle being below the neckline. And the reason I would get in on this candle versus this candle is because this candle was red, signifying that the bears won, that the bears had control, the sellers had control during this candle. During this green candle, it shows that the bulls, the buyers, had more control during that candle. So I need the confirmation that the sellers are in control below this neckline. And once we get into puts at this candle, we see that it's not long before we see this nice move down that we expect after we're breaking below that neckline. Now let's look at the W. The W pattern is also called a double bottom chart pattern. The double top and the double bottom chart patterns literally are just upside down versions of each other.
You got it set to M for mini, when it should be set to W for WeBull.
Patrick, I don't think.
In the case of a double bottom, we said that this stock was on the downtrend here until it found support here, which we'll say was at $20, causing it to pull back from that downtrend up to here, which we'll say is $28, whereas rejected from going any higher and fell back to that same $20 support as before. Same as before with the M, confirmation over anticipation. We wait until the move is confirmed here at the neckline with the candle breaking above it before we buy calls, banking on that move up. Here's an example of a W pattern on SPY, the ETF for the S&P 500. As you can see here, SPY started a downtrend from 441.11 down to 415.12, where it finds its first bottom, bounces up to 429.27 for its neckline resistance, where it's rejected back down to 415.80. As you can see in comparison to the M pattern we had on Nike's chart, these numbers are a lot closer. And as I said before, the closer the numbers, the better. From 415.80, we get a move back up to our neckline of 429.27. Confirmation over anticipation. So we buy on the next candle, which is a full break above our neckline, and we ride that wave up to 446.46. All right, I think it's about time for us to get into our weekly watch list. For this week, we have two bangers for you. The first one is going to be AMD. So with AMD this week, we see AMD falling down to 59.80 and making a nice bounce up to at least 66.02, but more than likely going up to 73.11 this week. The reason I have the 59.80 as our key level where we want to buy in for our calls, you'll see if we scroll over to the left, voila, we see that 59.80 was a strong resistance area for the first half of 2020. We got a nice pivot here for a rejection of resistance in February. And then it acted as the resistance for this consolidation area from April of 2020 until it broke out in July of 2020. Remember, just because a line is broken through does not make it a bad line. You do not have to delete it. A good resistance line will also become good support, and a good support will become good resistance. And the reason we say at least 66.02 is we see here when it broke through this level, it came back down to retest it here before it had this nice gap up. And if we look over to this past week, we also see that this same 66.02 line that was respected in 2020 was respected here from September 23rd until it broke down on the 29th. So I can see this being the key level as we reverse back up for this pullback from this downtrend. Now moving on to our second stock for our weekly watch list, Tesla. So what Tesla is doing now is trading sideways, what we call consolidation. We know the market goes three directions, up, down, or sideways. In this case, Tesla's trading sideways. It hasn't made a new high or a new low. New high since August of this year, and it hasn't made a new low since the beginning of September. So the way I would identify this area, so I'll box it up with this rectangle here, basically taking the resistance at the top and the support at the bottom of the zone. We see that there's a middle point here, so we'll also identify this as well. So the play this week for Tesla is if we get a break below 264.24, we'll play puts down to the next support, which the first one we have is here is around 251.28. And I would say the next one will be about here. at 226.55. On the flip side, if we get a nice move up, a bounce from this 264.24 area, I'll expect us to come back up here to this 283.86 by the end of the week. That'll do it for today's video. Just remember, don't be afraid to fail, because it is in the darkness where we learn to appreciate the light. No battle is won without a fight. Failure should only change the strategy, never the goal. If you've enjoyed this video and want us to make more videos more often, be sure to hit that thumbs up button below and subscribe to the channel if you haven't already. Also, comment below your thoughts and questions to let us know how we can continue to improve the channel. This channel and all of its content are made for you. Thank you for watching this video, and I'll see you in the next one.